Hey traders, welcome back to this week's weekly Forex forecast. Now, the last few weeks have been very slow in Forex. It's the last kind of 15 trading days roughly, which is not a lot in the grand scheme of things, but the last 3 weeks or so, 3 trading weeks have been slow. Why is that? Well, because we've had a huge amount of volatility, all starting with that EU fiscal catalyst, Germany talking about increasing spending, yields went up, the euro followed it. And then we had the tariff war, which kind of added fuel to the fire of volatility, and we had even more volatility. And the last 3 weeks has essentially have just been a digestion of the previous volatility. So we've kind of had a dry up of volatility. And it's not completely unexpected, but it has kind of grinded along. Even with FOMC last week, we ended up with an inside day in the dollar index on FOMC day. So really, nothing was happening again last week. However, this kind of lack of volatility doesn't persist, and it would seem like we're probably coming towards the end of this. Hopefully next week, because the more opportunities the better. Just bear in mind, we do have US CPI next week, and although the dollar has been very slow, US CPI has been a catalyst which has really kick-started the dollar previously. Now, it's not as important as it was when CPI was at 8.5% in the US, but we can still see moves, especially if we get a surprise in CPI on Tuesdays. Just bear that in mind. I'm not primarily looking at the dollar pairs in today's video. We are going to look at euro dollar because there is an opportunity I like in euro dollar. But aside from that, the pairs that we were looking at in last week's video still remain, generally speaking, some of the best setups I'm going to be looking at and are at the top of my watch list heading into this week. So if we start with euro dollar, you can see that we had the volatility. We became extremely overbought on a rolling daily basis in HedgeDash, the platform that we're using here for analytics. And this was telling us quantitatively, and I said to you in the videos, this is with a 95% expectancy roughly, we should be pausing and correcting. Any kind of upside should be limited. And you can see this has started to roll over, and on a rolling weekly basis, that means, it's going to take a few weeks to kind of digest this and go back to neutral. And, that will be when these bars turn back to gray. So we're almost there, not quite there, but we are back to light green, which is just overbought instead of extremely overbought. So it looks like this needs to kind of consolidate and contract a little bit more. And next week, what I would like to see is, I would like to see euro dollar, if we can get down below 1.11125, this would be where I'd be looking for potential long opportunity. So this is where we enter the buy zone. This is the sell zone, but each asset I look at, I have a directional bias. So in this case, I can only be a buyer or do nothing next week. That means that this is the area I want to pull the trigger on an opportunity. And this essentially just becomes a profit-taking area. So if I buy and it pushes into here next week, then I can sell it to book profits, but I can't short this from this area next week because this market's just too strong. So what I'd like to see is, I would like to see it trading down below the 1.11125. And if I drop down here onto the 4-hour chart, you can see there's not much but air between these two levels in the buy zone. So the reason for that is because of the heightened volatility. So there's not really any support. So if we're coming down to this area, the first thing I want to see is I want to see this enter the buy zone. And these are the steps that I'm going through in real time every single day with GMT members. And I want to see these steps take place before I pull the trigger on a trade and also send it out to members. And you can see in this case, there's no support over here. So we enter the buy zone. I'm going to start to look for the market to create its own support. In other words, it comes down, it starts to test lows. I see that the sellers are getting trapped. They're starting to lose faith in this short position. Why? Because momentum is slowing. And then as they pull their positions, that's where you get this 1 or 2 day liquidation back inside the range. And that is the setup that I'm going to be looking at, not just in euro dollar next week, but in all of the assets in today's video. So just bear in mind, we do have CPI next week, which means we could end up at the second upper and lower bounds. These levels aren't usually hit, especially with markets being as slow as they are. Even the first upper and lower bounds, markets have been struggling to take them out. But with CPI, we could see this. Now, if we do end up down below the 1.0980, and I probably won't trade any of the dollar pairs until after CPI, but on Tuesday, once we have CPI and it comes out, I will be looking for, that opportunity from the first lower bound. If it goes straight down and it doesn't form its own support, so in other words, it comes down, maybe it forms a support here, and then it breaks straight through there. And I see continuation. I see more momentum. So I'm not seeing a lack of momentum. I'm seeing more momentum. And it ends up hitting here. And then we start to see a lack of momentum. Then that is the second place I can pull the trigger on a long position, because the odds of reversal intra-week, so during the week, have greatly increased below the 1.0980. So you can think of this as being extremely oversold during the week and below this level as oversold. So that's what I'm going to be looking at in euro dollar next week. So having a quick look at the portfolio selection before jumping into the markets themselves, looking at which pairs are the best ones to trade next week and in which direction. So starting with euro dollar, you can see that euro, versus the dollar is something I would be favoring to the upside. It looks like we're still kind of holding our range because it's kind of bullish sentiment. So any kind of dip lower, I would still like to get involved with, but it doesn't look like it can really start the next leg up if that's going to be the next move, until we completely wash out that weekly sentiment and go back to those kind of gray neutral bars. And you see that all the time, in the markets, in hedge dash, that happens all the time, regularly. So whilst we're kind of waiting for that, I do still kind of want to be buying any dips in euro dollar. So that was why we were looking at euro dollar to the upside. Outside of that, once again, the currencies to the short side are actually better. The Japanese yen is still my number 1 short. The New Zealand dollar is my number 2 short, and the CAD is my number 3 short. And last week, actually, the yen pairs did trade into their lower bounds, and you got really good reversals from them. US dollar yen, euro yen, and franc yen all traded into their lower bounds last week. And, if you're able to get a short on the Japanese yen, in other words, buying franc yen from the lower bound, buying euro yen from the lower bound, or buying US dollar yen from the lower bound, which is a little bit risky because it was going into FOMC. If you did want to take that trade, you probably had to hold it. And we had a really nice sell-off in the yen and a bounce higher in those markets from their lower bounds. And they were really the only opportunities last week. Nothing else really triggered weekly levels. So it was, again, kind of a very slow week. So to the short side, I still like those 3 currencies, and I still like them primarily versus the Swiss franc, versus the euro. And then you could look, Aussie or the pound. Now, the pound, we did have an interest rate decision last week. And although we got an interest rate cut out of the UK, we didn't really see a huge sell-off in the pound. And so going into this week, I do actually favor the pound to the long side over the Aussie dollar, which is what we looked at last week. So I'm going to be looking primarily at EU majors versus the commodity currencies and also the Japanese yen going into next week. And actually, you tend to see that in a kind of stagflationary scenario, which is exactly what Jerome Powell was talking about in FOMC last week, that risk of stagflation with low growth and higher inflation. So those are the primary setups we're going to be looking at. We're going to be looking at franc yen to the upside, euro yen to the upside, both of which were great bounces from their lower bounds last week, highlighted in last week's video. Pound yen to the upside, I will also be interested in looking at in today's video. We're going to be looking at New Zealand franc to the downside, euro New Zealand to the upside, and pound New Zealand to the upside. We're also going to be looking at CAD Frank to the downside, EurCad to the upside, and pound CAD to the upside next week. Okay, so moving on to the markets themselves, starting as we always do with crude oil. Crude oil is still a short or do nothing for me. We did have the sell-off last week into the lower bound, and the lower bound actually held, but this is not a market I'm going to be stepping and buying. So even though we did get the bounce higher from the lower bound last week, I wouldn't personally step in and buy a market this week because the risk is for a breakthrough and you can start to see volatility to the downside. Now, we've looked at the fact in previous videos that the 67.81 is the bottom of a major descending triangle pattern. The target to the downside is about $45. So we still have probably another $15 to go, which means every time we get a bounce in crude oil, I want to be looking at shorting it. So this is a short or do nothing for me. What I'd like to see is the market to come up next week, take out the 64.55. And as we take this out and enter the sell zone, you can see prior highs over here, really nice. So this is the area next week in crude oil. I'm going to be looking for this to push into the sell zone, start to trade and attempt to break through these highs. And this is where I'm going to be looking for sellers to fail and for this to liquidate back inside the range. If, although it's unexpected, we end up at the 68.04 and we become extremely overbought during the week, you can see that this is right at the underside of that major descending triangle pattern we looked at in previous videos. So this would be the second place, although I'm not expecting it to take out the 68.04, that I could look for a short position next week. And the third and final thing, if you like breakout trading, works especially well on commodities, is you can look for the market to come up, attempt to take out the upper bound, and then break back down below the moving average. And you can see it kind of consolidates into the moving average. And that very often sets up a bear flag setup, in this case down to profit taking target to the downside, the 57.56. Okay, so kicking off the forex markets with the franc pairs, starting with franc yen. Now this was the move I was talking about last week. We sold off into the lower bound right here, And this was where I said to you guys in last week's video, we trade into this area. I'm going to begin to look for those double bottoms, inverse head and shoulders, looking for those bullish setups for a 1 or 2 day reversal. And look at this reversal back inside the range last week. And pretty much, you know, we came off a bit of profit taken at the end, but it pretty much reversed for the rest of the week. So we saw these really nice bounces from lower bounds in the yen pairs last week, and I am going to be looking for those again. So what I want to see is really just a replica of what happened last week, because we're ranging, we're consolidating, but the risk at the moment is to the upside in this market if it does break out. So I'd like to see this market come down, take out the lower bound at the 172.67. We have multiple prior lows, one here and also over here. So this is the area I'm going to look for this to enter the buy zone and then start to test prior lows. And this is why I'm going to be looking for exactly the same thing. Note how it comes down, we consolidate and we start to run out of steam and we get the liquidation. All these sellers pull their positions and you get that liquidation back inside the range. So I'm going to be looking for that 1 or 2 day reversal back inside the range next week. If we end up below the 170.48, that's where we become extremely oversold during the week. So it is the second place I can pull the trigger, but I do not expect this to actually be taken out. You know, most of the time, the vast majority of the time, these levels aren't taken out. They're kind of backup levels. So we become extremely oversold at the 170.48. It's the second place I can pull the trigger on a long position if I wish. And the third and final thing is if you get a fast market, you can look for it to pull back towards its lower bound, and then you get the break back above the moving average and you get the consolidation. And that first kind of bull flag setup in this case, if you are trading intra-week, you can look for into the profit taking zone at the 177.05. Next is New Zealand franc. I can either be short or do nothing. Cannot buy this market next week. I want to see this pushing up, taking out the prior high over here. And when I look left, there's no real prior highs here. The next one is above the upper bound. So here, or the second upper bound. So, you know, really there's a high over here. And this is the kind of scenario where I'd like to see it start to make its own highs. And if we start to make a kind of double top, you know, very similar, the opposite to what we just looked at in franc yen, because we've got that rally back inside the range from the lower bound last week. I want to see buyers kind of stalling out and then they liquidate their positions, they take profit and new sellers step in, like me in this case, and that also aids and assists price back inside the range. So I'm going to be looking for that next week for a 1 or 2 day reversal back inside the range. If we end up above the 0.5075, write that level down, because that's where we become extremely overbought during the week, and we do have a prior high here. So if we took this out, we become extremely overbought. This would be the high I'd be looking at for price to hit this, and that would be where I'd be looking to time a 1 or 2 day reversal back inside the bigger range, which is the gold range. And although I don't expect that to happen. And the third and final thing is, again, for intra-week breakouts. Now, these are a bit more risky when you've got low volatility because of the chop. So, you know, you want to be careful if you are trading intra-week. You know, when you've got low volatility, you're probably better off just sticking to the upper and lower bounds. But you can look for that breakdown if you do start to see volatility coming back in, and that first kind of consolidation, and then profit taking target to the downside is 0.4826. And the final franc pair is CAD Frank. I can either be short or do nothing. I cannot buy this market next week. So I want to see this market push up, take out this high, and also take out the 0.60350. That's the level at which we start to become overbought intra-week, so during the week in a market that I'm looking to take short positions in. So once we trade above here, you know, this is the kind of setup where if the high is just below it, you can see it kind of pull back, attempt to bounce, you know, and often make a double top like that. And then if that fails, when they sell off, or when you see these people booking their profits, or when you see traders booking their profits or exiting their positions, very often they have stop losses down here on the retest, and that also assists in this liquidation. So I'm going to be looking for that setup next week if it appears. If we can trade above the 0.61128, it's not expected to happen. There is a really nice high right here as well. So right on that, I would be looking for a reversal from here, whether I'm short already or not. If we take out this level, again, don't expect it to happen, but as a backup plan. And the third and final thing, of course, you can look for the breakdown intra-week below the moving average. The first kind of pullback and consolidation into the profit taking zone, which is the 0.58794. Again, I just reiterate the point, when you've got very choppy markets, intra-week breakout trading can be very difficult. And personally speaking, while you've got low volatility especially, I'd be looking at only trading setups above and below these levels. Okay, so moving on to the euro pairs, starting with euro yen, and this was the sell-off into the lower bound last week, which resulted in this rally from the lower bound. So we traded into the lower bound, and we got this quite strong snapback, kind of consolidated, bit of a bull flag there. We snapped back high and we kind of finished the week near the highs. So really nice reversal from the lower bound last week. That's exactly the kind of setup that I was talking about in last week's video, and also going to be looking at in all of these assets this week. So what I'd like to see is I'd like to see Euro Yen come down once again, take out the prior low, trading into support levels. We do also have a support level down here, and trading into the buy zone, which in this case this week is below the 161.56. So that's where we become oversold during the week. We already have prior lows. I'm going to be looking for bullish setups, bullish reversal patterns, looking for shorts, just as they did over here, to liquidate their positions and for price to come back inside the range for a 1 or 2 day reversal. If we end up below the 159.60, this is where we become extremely oversold during the week. I don't expect it to go there. If it does, I have the option, especially with these lows down here, to pull the trigger on a long position again if I wish, whether I'm long already or not. And the third and final thing is we start to make our way down towards the lower bound. But instead of taking it out like last week, we break back above with momentum. Maybe we make a new high. And that sets up that kind of bull flag opportunity for those of you who like Fibonacci into the profit taking zone next week at the 165.47. I can only be a buyer of this market next week. I cannot short this market next week under any circumstance. Next is Euro New Zealand. I can either be a buyer of this market or do nothing next week. I cannot short this market. So what I want to see is I want to see Euro New Zealand come down. And there's a really nice low, a couple of prior lows right here. So this is the area, we enter the buy zone and I start to look left. This is the area of support that I'm going to be looking for confluence, because if we enter the buy zone, we already have the odds shift in our favor for a reversal. But if we also trade into price support and we struggle to break through, and you start to see sellers struggling to break through, that is the sign that we can start to look for sellers to pull their positions and for a liquidation back inside the range for a 1 or 2 day reversal. If we end up below the 1.8527, that's where we become extremely oversold during the week. So I can, whether I'm long already or not, pull the trigger for a second time. I get the second bullet in the chamber below the 1.8527 if I wish. And the third and final thing, of course, is just simply a break back above the moving average with momentum. And we kind of, you see that momentum, strong momentum, and then you see it kind of consolidate and move sideways. And that's the opportunity. Often you get, maybe one of those in a week in the 4 hour time frame. You can look for that Fibonacci or bull flag setup into the 1.9285. And the final euro pair is EurCad. I can either be long or do nothing. I cannot short this market next week. So I want to see EurCad come down, break this kind of consolidation. I mean, look how tight this is. I mean, there's just nothing that can really be done here. Yes, if you have a strategy to intra-week range trade that, but the problem is you do that in many weeks and it's just going to explode, to one of these levels, and you can end up on the wrong side of it. So really, for all intents and purposes, we can't really do anything with this kind of price action here. This is the kind of market, generally speaking, you just want to be sitting out, waiting patiently. And once we start to get the market moving again, we take out the 1.5504. This is where I'd be looking for long setups. If we come all the way down, test this low, that would be great, but it's quite deep. So as soon as we trade into this area, I'd be looking for it to start failing at its own support, unless it just makes its way all the way down with momentum and then hits this. I'm going to be looking for those bullish reversal patterns for a 1 or 2 day reversal. If we end up below the 1.53366, I can pull the trigger, whether I'm long already or not, on a second long position in this market, because that's where we become extremely oversold during the week. And the third and final thing, of course, is the moving average breakout, where you break back above it. And really, the moving average is just like a dynamic trend line, right? So you've got essentially this kind of moving trend line. And when you get this breakout, above these prior highs as well, and you kind of want to use, the price action, prior highs, you get a breakout, and then the moving average kind of turns up, and maybe this pulls back, and starts to test prior highs over here. That's where you can look for that bull flag setup into the upper bound of the 1.58407. Last week, intra-week trading, you would have got chopped about. So again, probably worth waiting for volatility to come back, in my opinion, before looking for those intra-week stuff. But that's the kind of setup that I would look for if you were doing that in EurCad next week. Wrapping up the Forex pairs then with the pound pairs before moving on to gold and silver, starting with pound yen. What I'd like to see pound yen coming down, and look how nice these lows 1 and 2. This is the exact zone, or the exact area in the buy zone that I would be looking at pulling the trigger on a long position next week in pound yen if we can get there. So I'd like to see it trade below the 190.57, turn oversold during the week, and then start to trade into support. And this is where I'll be looking for reversal patterns to the upside for a 1 or 2 day liquidation, just like in the M pairs last week. If we come all the way down to the 187.78, it's not expected to happen. There are some nice lows here I would be using to time any reversal to the upside. But this is the second place I can pull the trigger on a long if we end up getting there. The third and final thing is the intra-week breakout. So first and foremost, it needs to pull back a bit. It needs to break back down below the moving average and then re-break with momentum. And then you get the kind of consolidation and then that first kind of move away into the upper bound at the 196.15. That's the profit taking target in pound yen to the upside next week. Next is pound New Zealand. This is a buy or do nothing for me next week. I cannot short this market. So it's clearly ranging. And what I want to see is I want to see it come down, take out the bottom of the range once again. You know, there's a low. Every time we test that, we kind of bounce. We test it, we kind of bounce. Multiple lows down here. So I'd be looking at all of these lows. I'd be looking for pound New Zealand to come down, enter the buy zone below the 2.22416 and then trade into these lows. And I'll be looking for the sellers to attempt to break through. I'll be watching if they're attempting to break but failing. That's where I'll take advantage of those mechanics and look for that liquidation back inside the range. 1 or 2 days, as I said, is what I'm trying to capture in my own account and also in the real-time setups throughout the week with members. If we end up down below the 2.1975, this is the second place, although I don't expect it to get there, that I can pull the trigger on a long position or look for long setups. And the third and final thing is a move below, down towards the low bound, but doesn't quite get there. And then you get the break back above the moving average, and you get that kind of intra-week bull flag setup into the 2.2774. Keep an eye out for that. But again, for me, I don't really think intra-week breakout trading is fantastic in low volatility conditions. You need real heightened volatility for breakout trading to really outperform. And most of the time, Forex markets are chopping about, which is why I primarily use these buy and sell zones in the Hedge-Analytics platform. And last but not least, we have pound CAD. Now, pound CAD is overall pretty neutral. It's not a super strong market. On balance, I favor long positions now going into next week. But we also took out the upper bound last week. And so I wouldn't be surprised if we start to roll over early on in the week and make our way back down towards the 1.8352. So if we do pull back next week and we take out the 1.8352 and we trade into these lows, this is where I'm going to be looking for a 1 or 2 day reversal, looking for those bullish patterns back inside the range. If we end up below the 1.81687, I mean, you'd need some kind of major catalyst for that to happen. So it's probably not going to happen. You know, very, very improbable that that will happen next week. But on the off chance we do get there, then this is the second place below here, which I can start to look left, look for prior lows and look for a buying opportunity for a 1 or 2 day reversal back inside the bigger range. And the third and final thing, again, we start to make our way back down towards the lower bound, but we don't get there and we start to reverse before taking it out. That's when you get a fast market and you can look for the intra-week breakout setup into the upper bound. However, in this market, especially because these are both sort of weak currencies, you know, the pound is not super strong. In this market especially, I would probably leave the breakout trading. I probably would just avoid that altogether in this market. Okay, so wrapping up the video with gold and silver, as we always do. I've been talking in previous videos that I want to be looking primarily at buying gold and selling silver out of the two. Now, last week we saw gold and silver take out their upper bounds, and gold continued all the way to its second upper bound last week. Very, very strong move. And what happened to silver? As gold went to its second upper bound, silver actually sold off. And we had silver rolling back inside the range. So that's the exact reason why I'm favoring, and I have been favoring, long setups in gold. And out of the two of them, if we're going to pull the trigger on a short, it would be silver, not gold. So going into this week, once again, I do favor long positions in gold and potentially short positions in silver. What I would like to see is, I would like to see gold coming down, taking out the prior low down here at the 3237.26. And you can see we've got prior lows over here, and we're in the 1 hour chart this time. This is where I'll be looking for price to test and then start to fail. And I'll be looking for those double bottoms, inverse head and shoulders for a 1 or 2 day reversal back inside the range. If we end up below the 3146.22, is this going to happen? Highly, highly unlikely. If we do end up here though, I can pull the trigger on a second position if I so wish, but I don't think this is going to happen. And the third and final thing is with gold, you know, the commodities have been more volatile than the Forex pairs. So if you go into breakout trade, and this is true anyway, then, you know, commodities are actually better for breakout trading than Forex because they have more volatile moves like we saw with gold last week. So if you are breakout trading, I would stick to the commodities personally speaking, but you can look for the re-break and that kind of bull flag setup either in the 1 hours or the 4 hours into the profit taking zone next week, which is at the 3419.33. And we do have this prior high sitting in the sell zone or the profit taking zone because I can only be long or do nothing. And so this would actually be quite a good target to the upside, you know, for a prior resistance area in the sell zone next week in gold. But I cannot sell this market outright. So, you know, if I buy it, I can sell it in this area to book my profits, but I cannot open a short position on this market next week under any circumstances. And finally, we have silver. Now, last week we pushed up, we traded into the weekly upper bound, and look at the reversal back inside the range, and we actually ended up right back pretty much at the middle of the range because that was where we opened last week. Straight into the upper bound and we reversed. So I'm going to be looking for this kind of opportunity once again this week. What I'd like to see is I'd like to see silver pushing up. I'm not a massive fan of shorting silver, to be honest with you, but if the opportunity is there, then I may take it. But above the 34.28, this is what I would need to see to even consider trading silver next week, and preferably and most likely trading into these highs. These are the key areas of resistance I'd be looking at in the sell zone for buyers to start to struggle like they did over here, start to pull their positions, and then the liquidation back inside the range for 1 or 2 day reversal. If we end up above the 35.85, you know, something significant has happened, a very significant weakening of the dollar most likely. I don't see that happening, so I don't think we come up here, and it's very unlikely we do, but as a plan B, I can pull the trigger on a position if I wish. And the third and final thing is if you start to see the dollar accelerating and silver kind of dumps down like this, kind of breaks out of this, you know, almost kind of pennant pattern here, then you can look for that intra-week kind of bear flag setup again in commodities. You know, breakout trading is probably preferable right now. In fact, it's always preferable, but certainly right now with low volatility, it's preferable. But you could look for that bear flag setup into the profit taking zone next week at the 31.14. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.